Hey, Bulls and Bears, welcome back to another report, another episode. As usual, we have a lot of financial economic news to get caught up on today. It's Saturday. You're probably watching this on Sunday, but I'm recording this kind of late Saturday night. I might put it out tomorrow. We'll have to see. Either way, hope you're doing well. Hope you're having a good weekend. Um, we'll get into the markets here and other things here, silver investments, inflation, of course, some stories behind the inflation. But I just wanted to say I just got done grilling. I've been grilling now instead of going out to get food, right? So I've cut out about 95% of going out to get food, whether it's just the drive through or getting takeout, even going to restaurants. Haven't completely eliminated that, but mostly eliminated it, eating at home more, grilling outside on the grill now that it's nice. And in California, you can usually grill any time of the year. I mean, we don't get where I'm at any snow at all. Um, but you get a lot of rain sometimes. Sometimes it's a little cold, overcast. So usually October, November, December is when I really don't grill. January, a lot of rain. But I've been doing a lot more of that and been feeling a lot better. Been saving quite a bit of money. I did go out to a restaurant, PF Chang's, a couple weeks ago. I don't remember what was the occasion. Mother's Day, Mother's Day. So I haven't completely stopped going out to restaurants, but definitely 95% of that I've cut out fast food, going out to get even Chipotle, stuff like that. It's mostly at home making food now. And I found it much better for myself and the family. I'm sure it's healthier. Of course, you got to be careful what you buy, what you cook on the grill, but it's healthier. It's definitely a money saver, and I think it's better for the family. Everybody, kind of comes outside and sees what's on the grill, sees what's cooking. So it's kind of fun. Anyways, let's go ahead and get into it here. Let's get into first. Jerome Powell is out with the CV19, and he is working from home. That's the actual headline. I'm not making this up here. Jerome Powell working from home. My question is, what is he doing at home? Is he studying the economy? I doubt it because he's pretty much gotten everything incorrect. Even though for years on this channel we told you that inflation was just going to continue to get worse because they were just doing more of the same that caused the inflation to begin with. More uh, massive money printing. It's not going to stop. You've got to stop this money creation in order to stop this. And back to what I talked about in one or two reports ago, we're printing $1 trillion. They call it borrowing, but they have to conjure it up out of something. So some people call it printing. Anyways, we're borrowing it and running up the debt $1 trillion every 100 days. But that actually has even gotten worse now. I read it's every 96 days, right? So it's already dropped 4 days. And you notice the times when we have a lot of debt, like now, the pace, the pace accelerates, right? As we get to closer to the crisis, whatever that crisis may be, it accelerates. So at this pace, who knows? It's going to be printing $1 trillion every 2 months, every 60 days, and then maybe in a couple more years, we'll be printing $1 trillion every month. And then finally, everything's so expensive, the currency is completely gone. I mean, that's how we've seen it play out in other countries, and no one knows exactly if that's going to play out here like it's other countries. But in the U.S., will it play out like that? I mean, we got de-dollarization happening. So I've always said hedge against this, folks. Silver. Get yourself some silver if you haven't already. Hopefully, most of you went out and bought it back $14, $15 when we first started talking about it. If you would have, you'd be double where you're at now with silver above $30. You'd be setting very, very well. Better investment than the housing market. The stock market hasn't doubled since silver went from under 15 to 30. This is the best investment out there, according to just the overall markets. Now, of course, there's certain stocks that have went up tenfold. Look at Carvana. Look at lots of other ones. So you can still choose stocks here and there that did very well. But as far as the overall investment, the overall indices, the stock market versus silver, hands down, has done very, very well. But let's get into this here. Oil above $80 again here. Gold 24.19, silver 31.77. That was Friday's close, and the trajectory is higher. The 10-year bonds are being really, really suppressed. We've got a 4.4 on the bond yield, the 10-year bond yield right now. that means somebody's coming in and buying the debt. And it's not foreigners, because what did we just learn? We learned that foreigners, and especially China, just dumped the most U.S. debt in history, the biggest debt dump of U.S. dollar denominated debt that we've ever seen, right? So it's happening. Why are rates not skyrocketing if all the buyers are gone and there's just sellers of U.S. debt now, right? I think it's the central bank coming in there and preventing a big spike in that 10-year yield, that bond yield, because what do they know? They know that mortgage rates will also spike along with it, because it's really tied to that 10-year treasury, remember. And they don't want mortgage rates to go even higher because we're already seeing a slowdown in the housing market. We're not seeing prices crash or even very big declines yet, because there's still a lot of people with the ability to borrow money. Banks are still loaning out money, um, and they're not really tightening that much. We've only got 20% of banks tightening at this moment, whereas if you look back at the financial crisis, we had over 60, close to 70% of banks were tightening, and they weren't just tightening a little bit. They were tightening a lot. And I know because I bought a residence in 2010, and it was very, very difficult to get a loan. A lot of paperwork, a lot of documentation, and I bought a home that was actually a short sale. So I lived through it, and I can see drastic differences between now and then. Even if I didn't live through it, just looking at the statistics and the one I just gave you, like the number of banks, percentage of banks that are tightening, it's minimal now compared to what it was back then, right? So we need a similar thing to happen now in order for there to be a big correction or deflation or to initiate any sort of crash. And a lot of people out there, they're talking about this crash that's going to happen, the crash is going to happen, but they don't tell you how and when. Well, how would be if there's severe restrictions on money lending, known as credit tightening, right? We're not seeing that yet. Will the banks tighten at some point? Will most banks tighten like we saw in the financial crisis? Well, the banks have to be fearful in order for them to tighten. Right now, banks are not fearful. They don't care, because they know they're going to be propped up no matter what, because they're integral to the economy. Why? Because the economy is mostly based on loaning out money, people spending the money, right? Lending, spending, and then pretending everything's great. But in the meantime, you have all this debt accumulating in the background. You have people approaching the cliff on their credit cards. 1 in 5 now maxed out on their credit cards. Just one of the recent statistics that we saw come up here just in the past few weeks is that number: 1 in 5 people are maxed out. So of course you see a big slowdown, a big drop in consumer spending. So Jerome Powell working from home, I'd like to know what he's doing, because he got it completely opposite on inflation. He said inflation was, what was the word? Transitory. And you and I knew, 99% of the people watching this channel knew that it was not transitory, that it was going to get worse. You still have that 1% here on this channel that says, I'm wrong, blah, 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 everything's going to crash. And I've been saying, no, everything's going to continue to inflate. The bubble's going to get bigger. It doesn't mean that all the bubbles are going to get bigger, but in general, the cost of living is likely just to continue to get worse. They're destroying the currency. They're absolutely destroying the currency. If it weren't for the rate increases that we've seen, where would prices be right now? Home prices might even be up another 20, 30% from when we started raising interest rates, a year and a half ago. Who knows what it would be? Maybe the typical used car would be going up in value still instead of declining. By the way, we see some pretty good declines in used car prices, but those are wholesale prices. Dealers are not yet passing along the savings. We talked about that in great depth on one of our videos, so I won't get into that. But dealers are being very greedy with cars right now. Wholesale prices are coming down, and we see dealers, their lots full, and they're getting overflow lots because they have so many cars now. And all the abandoned commercial real estate, we see these a lot of dealers getting overflow lots so they can really rake it in, buying these cheap wholesale vehicles, and people are still crazy enough to take out these big loans and paying these current prices. Now, let me give you some numbers here on the total debt. Now, the total U.S. debt right now, you hear about the number 34.7, almost 35 trillion. It's actually $100 trillion. And that doesn't even count all the unfunded liabilities. This is just the debt if you add up household, business, state and local governments, financial institutions, of course, the federal government. All these combined is $100 trillion, folks. We're beyond the point of insolvency. We can never, ever, ever pay this back. If you look at our unfunded liabilities, you're talking another 100 trillion on top of that. And if you want to count the banks and the financial institutions, if you throw in the derivatives, you're in the 300, 400 something trillion. It's so large, nobody even knows, right? And that's what happens when you don't have anything to stop the creation of money. You have to have some sort of standard and some sort of uh, commodity, metal to back the currency at a set ratio, right? It can't just be backed by oil because they can change the ratio. It has to be something like an ounce of silver equals this many dollars, an ounce of gold equals this many dollars. It has to be a set ratio, and it has to be convertible, meaning you can trade in your money, whatever it is, digital paper. You can trade it in for the physical item or the commodity, right? It has to be convertible. Otherwise, it's not going to work, right? So, are we headed that direction? I think so. It could still be a painful and bumpy road until we get there. In the meantime, keep stacking silver, folks. Look for ways to hedge against inflation. Silver, in my opinion, is not just a inflation hedge. It's an investment in the future of money because I believe at some point we will go back to a sound system of money. But it's going to be a big bumpy road before we get there. So going through what we're headed into right now, it's a combination of a lot of things that you want to do. A lot of it's preparation, and you see these people out there that have been preparing for decades, cabins out in the woods, survival bunkers. It's not just the crazy fringe people anymore. It's CEOs. Like we have Zuckerbucks over in Hawaii building his underground bunker. We've talked about that here, preparing for something big, for something huge. No one knows the exact date. So always be prepared, right? Don't be scared. Don't freak out. But every day, prepare a little bit. Today, I went out and got some more canned goods. We're starting, I'm looking at my shelf over here. We're starting to go through some of the older canned goods from when I started stacking. So we're going through that right now because it expires after a few years. So you use the old stuff up as you continue to buy new stuff to replace it and stack up more on top of that. So I hope you guys like this Saturday report. I just wanted to go over a couple news items here. Did I forget something? Yes, I feel like I forgot something. Sorry, I'm not as organized today as I usually am. Let's see here. Here we go. Consumer spending grows to 0% growth. I shouldn't say grows because it didn't grow. Consumer spending didn't grow. Finally, we've got a 0% growth number, which is no growth. And that is very alarming. Right? So people are still spending, but when you look at the month over month numbers, the amounts people are spending are not increasing anymore, right? So instead of, let's say somebody goes out and spends $5,000 on their credit card, then the next month they spend 6,000, and the next month they spend 7,000. That's growth. Now it's just staying level. It's 5,000 this month, 5,000 that month. They're still spending, but the amounts are not increasing month over month. So what's next? Next is a drop in spending. As more people get maxed out, right now it's 1 in 5. As more people get pushed into the financial wall or the cliff, whatever you want to call it, the end, as they can't borrow any more money because they can no longer make their minimum payments, and banks finally stop increasing their credit limits and maybe drop their credit limits, that's when you really start seeing this whole thing accelerate. And it usually accelerates very, very quickly. And then everyone reporting the news will say nobody saw this coming. It was a shock. It came out of nowhere. And I think that's what's going to happen. Who knows the timing? But if you're prepared and preparing a little bit each day, it doesn't matter, right? So we're going to get through this together. As always, please make sure to subscribe. Come back for more videos. We'll see you on the next report. Bye for now. Peace.